Here we are looking at the Euro-Yen daily chart. We've got price bars on the chart, plus the 20 and 50 moving averages to help us to determine trend direction. Now, we're going to start to look at some more advanced price action there. And advanced price action doesn't just mean looking at the price action itself, it also means looking at the price action in relation to other aspects of the chart. Therefore, we'll be looking at things like moving averages, like support and resistance, where we can easily identify things that have happened on the charts that we can then potentially trade. And we're looking at the specific price action signals that set up in and around these areas. First of all, let's take a look at this downward trend that we have in the middle of the screen now. And I want to focus in and around the area where price touches and pulls back to the moving averages. We all know that price cycles in trends. It cycles with the trend and against the trend. And we can draw it on there now. With the trend, against that trend, with the trend again, against the trend, and with the trend, and so on. The point is that we know that the price cycles, and we want to focus on these particular cycles and how we can then profit from them using price action along with other supporting factors. Taking this specific area now, we're going to look at the price action structures in this area. We're going to zoom in a little bit further so we can identify what's actually set up there. Well, first of all, we can see that if we wait for the price to pull back to the moving averages, we have this inside bar here, which also happens to be a little bit of a pin bar as well. So we may have had a potential sell signal using the moving averages. We see that the moving averages are pointing down. We see the 20 moving average is underneath the 50 moving average, and we see the price action sell signal there. And we see that the trade more than likely got triggered and actually resulted in a loss. I'll put a little red cross there so we can see it as identifying as a losing trade. We're then looking at around this area here where we get a succession of pin bars again. So we've taken one loss, but we still believe the trend to be to the downside. And sure enough, taking either of the trades on these two pin bars resulted in a nice move to the downside. We can see that price did pull back to the moving averages and then aggressively moved to the downside afterwards. We can also see the shift from buyer bar to seller bar, buyer bar, seller bar is a type of reversal bar formation as well, which helps to bring support for this trade. And we can see price then moves aggressively to the downside. I'm not going to look too much at the exit straight away because we haven't really covered that at this part of the program. But we are going to make sure we're looking at the entries here, and then as you progress through the program, you'll start to understand the exits more as well. But at this point, what I want you to understand is that we had one failed signal, which resulted in a losing trade, and then we had a couple of signals here, either one that was taken resulted in a profitable trade. As we then move forwards, we'll have a look and see what else sets up. Sure enough, price starts to move back towards the averages again. We can see that both the 20 and the 50 moving averages are both pointing down, and they are separating as well. This is something you'll have covered in your basic Learn Forex course, but you're also going to be discussing in more detail throughout this Pro Forex course. Now we can then see that we have a doji bar, an inside pin bar, and a double inside bar formation. This straight away tells us we're expecting a strong movement in price to occur. And what actually happens next is another inside bar. So we actually end up with a triple inside bar formation, which is extremely rare and represents extreme indecision. But with this price action signal, we can see that trading it with the trend in this trending marketplace, we can then see just how far prices moved as a result. Notice that we weren't just looking at the price structure of any one bar here. In this case, we were looking at the price structure of several bars, from the inside bar to the double inside bar to the triple inside bar, and around here is where we got our sell signal trigger. We would have been interested in selling the market around this area here first of all, with it being an inside pin bar, then the double inside bar, then the triple inside bar. So all the way through here we'd have tried to sell, but the order would not have been triggered. Tried to sell underneath this bar, but the order would not have been triggered. Tried to sell underneath this bar, get triggered in, and you can see over the resulting time the trade moved aggressively in your favour, to the tune of around about 400 plus pips, which is a pretty staggering move considering your stop loss was in the region of 85-90 pips. So not a particularly large stop loss, but a very profitable trade there. And we can see what we're using here is a combination of the moving averages to help us to identify the trend, and the price action signals as they set up at the end of phase 2, the beginning of phase 1, and we can actually then see that with this extreme indecision from the double and triple inside bar formation, which then leads into the strong move in our favour. So there we go, we can see those couple of trades through there, and we can just point out that would have been one losing trade, one winning trade, and another winning trade. Straight away you can see that the losing trade there would have lost us around about 100 pips. But the winners have generated profits of around 225. And again, we know this next one around about 400 pips. As we continue through here now, let's look at some additional trade setups that occurred. We had the pullback here to the 20 moving average. If we zoom in a bit more detail, we can see we had a reversal bar formation here, which set up to give us a sell signal. We had buyer bar, buyer bar, buyer bar, seller bar. We would have been looking to sell this particular price bar. We'd have tried to sell underneath the low of the bar with a stop loss above the high of the bar. We just mark that on there. We'd been looking to place a sell entry near this level here, and we'd have placed our stop loss just above. I'll just change the colour so you can see it more easily. But the red there identifies the stop loss, and the black line there identifies where our entry would have been. We'd have been triggered into the trade, and this would have been a losing trade. But we can see, looking at this, we've got 2 winning trades, and we have 2 losing trades. So at this point in time, only a 50% success rate. But the winners are significantly bigger than the losers. This is how we're making money trading. Bigger winners than losers. Let your winners run, cut your losers short. We can then see the market enters into a period of consolidation, whereby we don't particularly want to be trading. We don't know whether the market's likely to move up, down, or just continue sideways. So we leave it alone until we get another price action signal. Now that we see that the 20 moving average is above the 50 moving average, and they're both pointing up and separating, we're starting to look for long signals. So we're waiting for a price action signal now as a reason to enter the market. But we need to make sure in order to actually get the price action signal, it needs to be somewhere around about this 20 moving average. It can be just off of it, but it needs to come actually pull back so we can see the phase 1 and see the phase 2. So here's the pullback, and now we're waiting to identify a price action signal to enter into the marketplace. And we get this by an inside bar, which also happens to be seller bar, buyer bar, which is a basic form of reversal bar formation. So we'll be looking to enter into the market at this point here. What we're trying to do is we'd actually enter above the high of the bar, and we'd place our stop loss underneath the low of the bar there. So we can see where the entry and the stop loss would have been. The next day we're triggered straight into the trade, and as I mentioned earlier, I'm not going to talk too much about the exits at this point, but we can see that the trade has run aggressively in our favour, somewhere to the tune of around 300 pips. A very nice high reward to risk trade. As we continue, we'll seek additional trades with the trend. Price has pulled back towards the moving averages. We're looking for a reason to enter the market here. Seller bar, buyer bar gives us this reason, with it being a reversal bar formation. We look to enter into the trade, and we can see price moves again in the direction that we expect. We now see the market starting to go more sideways. And as a result, as the market's starting to go more sideways here, we wouldn't look to take any potential trades. We wait until a clear trend presents itself. And here we go, we've got the downward trend now. So we'll be waiting till we can see an obvious phase 1 and obvious phase 2, and we're looking for a pullback towards that 20 moving average. As it happens on the way down here, there doesn't seem to be a pullback, it's a strong downward trend. On a smaller time frame, like a 4-hourly chart, we may have been able to benefit from that. As we run through, we can see the market continues to go sideways again, which would more than likely keep us out of the market here. We may have found ourselves looking for a sell signal at this point. If so, it worked out to be a losing trade, but we can see that overall we've got an equal number of winners and losers, but our winners are significantly bigger than our losers. As we progress through again, we're looking for another clear trend. So right now it's moving sideways. We're waiting for a clear trend to present itself, which we have here now in the form of an upward trend. We have the 20 moving average above the 50 moving average, and we can also see this nice strong bullish pin bar formation which shoots off aggressively in the direction of the trend. As we progress further forwards, we're looking for trade entries. We can see seller, buyer bar formation, and it's likely that we want to get into the market around this point, and price moves aggressively in our favor again. So it's all about that confirmation of having moving averages helping us with the trend direction, the price action signal pulling back to the moving averages. And if you want to start to look at support and resistance levels as well, this is something else that you can look at. For example, we have a support level here, which we can clearly see gets retested, and that would result in an extra confirmation for us to get into the trade. As we progress further, we can see more reason to get into the marketplace. Seller bar, buyer bar. We can see that reversal bar formation. We can see that we're overall in an upward trend, and we can see the result as it continues to move in your favor. So again, through here we'd be looking at another winning trade through here, and another winning trade here. Again, we haven't discussed complete exits yet, but you can see for yourselves the price has moved aggressively in favor multiple times. Again, we get ourselves price pull back to the moving average. If you're looking to find a trade with the trend, this one may have resulted in a losing trade. Price moved up, didn't really go very far in our favor. We'll classify that one as a loser. The market starts to go more sideways. Maybe we stay out of the way and wish we hadn't. Sometimes that's just the way. And we can see clearly now this is a strong upward trend. We're looking for reasons to buy into this marketplace. We see price pull back to the averages. Seller bar, buyer bar. We see the upward trend. We see the pin bar. We see the reversal bar formation. This would be a great entry into the marketplace and a great winning trade. Overall, throughout here, you can see that there's a series of winning trades and losing trades over this entire period. We've had 1, 2, 3, maybe 4 losing trades, but over that same period of time we've also had 1, 2, 3, 4, 5, 6, 7 winning trades, and the winners are all bigger than the losers. That's a really important thing with trading, is to make sure we have bigger winners than losers, and we also have more winners than losers. The more winners than losers helps us psychologically to keep trading. And the bigger winners than losers means that we actually make consistent money and consistent profits. Now, bearing in mind this is just one currency pair, and ordinarily you'll be trading several currency pairs at the same time. That's the reason why overall you have that balanced portfolio effect, whereby some of your trades will win, some of them will lose, but as you have bigger winners than losers, you can expect long term to make money. Notice that with this price action and with these price action setups, we're looking for them at sensible places when prices pull back to the averages at the end of phase 2, the beginning of phase 1. We're not just looking for them because they happen to be there. We're looking for them in sensible locations when the price pulls back to the average and indicates it's likely to continue with the trend. Also notice that we haven't looked at any counter trend price action signals. Everything we've looked at here has been trend based. And that's because more money has been made trading with the trend than any other method. As a result, it's a very sensible thing to make sure when you are trading, you're trading with the trend, as this results in a higher success rate and bigger winners than losers.